Hello, friends, and welcome to this special episode. Today, we're going to talk about can Nifty hit 50,000 under the current government. So, I'll try to keep it as apolitical as possible, and we'll go through many of the regimes that we've had in the past, how the markets have done. I've also thrown in the performance of gold just for reference sake, and then we will essentially try to imagine what can the current government do. So performance of equity and gold across all governments, we start from 1980. That's where the data is quite well documented in terms of stock markets. So Indira Gandhi government, 1980 to 1984, 31st October, when she was no more. After that, 4 years, 291 days. Phenomenal performance in a just over a 4 year period. Sensex going 115% up, pretty much in a secular mode. And gold, of course, was in a major bear rally, down minus 34% over 5 years, 4.5 years. Also, to recall that gold had gone up tremendously from 1971 to 1980, and that's where the decadal top was made, and hence this kind of fall over these years was justified to that extent. Rajiv Gandhi came into the picture from October 84 till December 89, 5 years and a little more. Again, equity markets did extremely well, 182% in just less than or slightly over 5 years. Gold also doing quite well, uh, given that it is a hedging and inflation beating instrument at plus 70% in those periods. Then VP Singh came in December 89 to short-lived to November 90, 343 days. Surprisingly, immediately on coming in, there was no action for many months together. But then the Harshad Mehta bull market move started in that period, and the market was up around 81% during this period. Gold was largely flat during that regime. And then VP Singh government broke down and Chandrasekhar's government came in only for 223 days, November 90 to June 1991. And this political turmoil had its own uh, you know uh, collapse post October or November 1990, and went down about 32% before recovering and closing flat in his regime. Gold was up about 10% during that. Then PV Narasimha Rao government came in, and of course the uh, unleashing of opening up of the India market happened 91 June till May 96 for a period of 4 years and almost 5 years. And you can see this Harshad Mehta peak really happened. I mean, 240% was the gain within a matter of 1 year of this coming in. And then there was an equal sort of a equally sharp collapse in the Sensex, virtually wiping out most of the gains and most of the latecomers to the party. And then there was another rally which nobody really talks about, but this rally also went up significantly, 3, 4 times. And then there was correction also. So it's very volatile regime that this was there for 5 years. Gold, meanwhile, steadily moved up about 78%. And then Atal Bihari Vajpayee's government came in for 16 days. No point in getting into 16 days of performance analysis. But the next one was HD Devagowda, June 96 to April 97, just little less than 1 year, and markets didn't like it at all to start with, and they dipped quite badly, minus 27, 28%. On premise of the government breaking down, this also recovered very well. Gold went down about 11% during this regime. And then Mr. Gujral came to power April 97 to March 98, almost another year. Again, a nothing sort of a outcome out of the markets as well as gold. There was, uncertainty and essentially no continuity of any kind of policy that was happening. Then Atal Bihari Vajpayee came back again, 1998 to 2004, 6 years and 64 days. And the markets remained volatile with the first witnessing the dot-com boom, the global dot-com boom, and then the bust post that, and then a couple of years of extreme lull. I think this is the kind of period that we have not seen in the markets since then. to have a market which just stagnates for more than 2 years, two and a half years, and then a rally kind of started, which was the emerging markets rally from 2003 till beginning of 2008. And of course, the last immediately just before the election, or just after, actually after the election, there was a crack in the equities because BJP lost this election, and gold was reasonably stable at plus 52% during this period. Then Manmohan Singh government came in for the next 5 years, May 2004 to May 2009, and the markets in that mode after the correction of the election. This is probably one of the best rallies that India has ever seen. Almost 300% up within a matter of 3 odd years. And then, of course, the global financial crisis happened, and the market corrected, pretty much giving up all gains of these few years in a matter of 8 or 9 months, bottoming out in 2009 March, and then again starting back up. Net still to nearly 200% gain. Gold making 165% gain during this period. So this was the golden sort of 5 year period that India saw for both equities and gold. And then once Manmohan Singh was again brought in, or was sworn in, uh, the market again went up nearly 73% all through, although there was a lull between 2011, 12, and 13. But as we were expecting a change in the government, the equity market started to go up from 2013 onwards. Gold also performed very well during this period of plus 60%. And then Mr. Modi came in May 2014, and in the first 5 years, Sensex has done 63%, gold was up 25%, and this was all pretty much par for the course. And then the next term, May 2019 to 24, was marred first with COVID. So you can see that COVID, the Nifty was smashed down almost 30%, while gold was going up at the same time. And during this time period, uh, till date, you have sorry till May, you have Sensex going up almost 100%, gold also doing similarly well. So both in the this regime as well as the previous 5 years, you had both gold and Indian equities do reasonably all right. Now in the latest uh, 5 year period that we've just started, you want to basically see where we can reach, what we can, see from the last 5 or 7 different regimes that we have seen, is that, you know, the current movement of the markets so far has been pretty much government agnostic, while the very flimsy governments of coalition of Chandrasekhar and Gujral were a bit unstable, and Deve Gowda politics was not really appreciated much. But other than that, whether it was Congress-led governments or BJP-led NDA, both have done reasonably well in terms of market performance, in terms of uh, overall stability in the system. So one thing we can derive out of this is that the Indian markets are reasonably resilient, and beyond a point, the political makeup is not able to really influence the underlying growth of the markets. The other thing that you can also say is they are self-correcting in nature, so that there will be times where the market will get overextended, but there will be corrections, and then you come back to the same path. Like each time you feel that the extension has come on some pretext or the other, whether it is global financial crisis, whether it is COVID, whether it was this election results, the markets will keep correcting and self healing the damage that is happening, and come back to that same path that the markets have been on. So from all those perspectives, it seems that even if the governments try to maybe deviate from the path of the prior continuity, the markets don't take too long to punish that, and to sort of come back to their original trajectory. So this has been the trajectory this last couple of decades and more. You can see that we are on some sustainable growth path here, and big obstacles have come in the middle, whether it was global financial crisis, whether it was in late 90s Asian crisis, whether it was COVID fall here, whether it was change of governments. the market just chugs along, and that is the beauty of the India growth story. And so also let's see the historical 5, 7, and 10-year rolling CAGR on Nifty. That will give you a great picture of in the last 24 years. The 5-year rolling CAGR today stands at 15.1%. So this has remained pretty much, I would say, in the ballpark of between 10 and 16, 17% since the last almost a decade, barring COVID. And if I see the 10-year rolling period returns, they have been at 13.4% now, and the 7-year rolling period is at 14%. So 10-year is at 12.1%, 7-year is at 14, and 5 year is at 15.1. So they are very close to uh, this 12 to 15 band, whether you are seeing it over 5, 7, or 10 years period, where and even if you were to see it 10 years back, discounting the previous regime, you would see it is at 6.6, 12.9, and 17.5. The variation was more earlier, could be also because of the great run and the crash of the GFC, but the volatility in the entire system seems to have gone down dramatically in the last decade, and a very linear kind of growth is coming in. I was reading some reports recently where they are saying that the next 5 years the earnings growth of Indian corporates is going to be somewhere between 20 and 22%, which has not been the case for very long periods of time so far. So it looks very, very encouraging that the current rate of growth, the 5-year rate of growth at 15.1% can continue. And if we do continue on that same path, then a 15% CAGR, if we have for the next 5 years period, we will hit a doubling from here. So almost near 50,000 is where we can achieve if we hit a 15% CAGR. You can use the rule of 72. So 72 divided by 5 is about 14.4. So if you go with that kind of CAGR, you can double in 5 years time. And if you hit 15% CAGR, we will go from 24,000 to 50,000, which is slightly above doubling. So this is very much possible. We really could get a movement like this also. I mean, that is just maybe a personal bias that I have, that with the kind of global slowdown in other countries that we are seeing, more and more money should come towards India, being the one of the fastest growing large economies in the world. And by 2030, we are looking at becoming the third largest economy. So that, I think, is going to pull in more and more funds from overseas, and we could get a trajectory like this. Can you see the difference in the trajectory here and the trajectory here? I mean, there's a whole lot of difference in how the market escalated here. That kind of move is certainly possible. So from all those perspectives, it does seem like that if the target of 50K is not so out of reach, rather it is looking to be quite significantly within the reach of the market. So this is all that all the conjecture that we can make based on the current situation. Uh, and we can see that the kind of global presence that our export oriented companies, or the fact that we are now exporting things within the defensive sector also, and that sector is growing up along with the current account surplus having been achieved just very recently after a very long period of time. All these, when you put together as a package, can really make that difference. And I think the next 5 years looks quite promising. Of course, we will be following the markets wherever they go. If they go down, we will be following them down, and if they go up, we will be following them up. Uh, to a large extent, the political makeup and the government is sort of not so important for the markets, as long as the governments continue to work towards providing that environment where private entities can prosper. A lot of people also think about that the government is not don't has not done much in terms of offering jobs, etc. As long as conducive environment has been made, private sector is the one that needs to come up. and create jobs and make sure that the country runs on a high growth path. Please comment on this story below. We want to hear what you think about the next 5 years. Um, Whatever may be your political affinity, the country's growth is primarily the objective for all investors. And unless we have that fantastic runway ahead of us, we will not be able to achieve our target. So this is extremely important that we have that kind of a demographic dividend, also playing out the way we have always been talking about it. And this next 5 years or maybe 10 years is that ultimate sweet spot for the country, where either we will make it and go towards a higher per capita kind of a situation, or if we mess this up in the next 5 or 10 years, then we'll just be left with uh, just being there in a smaller range, and all these lofty targets, they will remain out of our reach. But do comment, and I'll love to read about what you think about this. Thanks. Bye.